Or some 400,000 private homeowners will pay more in property taxes next January. The higher property tax will also apply to public housing homeowners. It comes on the back of rising rents that also push up the value of properties. Metteo with this report.
Even as property taxes are set to increase, the government is providing households some relief. The Finance Ministry says the rebates will cushion the impact amid concerns over a higher cost of living. Residents living in one- or two-room public housing flats will not pay any property tax. Those living in three-room flats will receive a rebate of 70%. Families residing in four-room units will get a 50% rebate. Five-room and executive housing and development board flat owners will collect rebates of up to 40%. Private homeowners will be given the lowest rebate of 15%, capped at $1,000. For a family living in a three-room flat, this means they will have to pay about $1.50 more monthly. Property taxes can be paid monthly or through a one-time payment. But for those living in an executive HDB flat, they will fork out an average of $6.30 more every month. Overall, HDB flat owners can expect to pay an additional property tax of no more than $3 a month on average. Depending on the value of the private property, some owners can expect to pay an increase of less than $15 a month. The government announced its plan to increase the property tax rate last year. This is the final step of the move. It adds that owner-occupiers will continue to pay a lower property tax rate compared to those with non-owner-occupied properties, such as those used for investment. This is in line with the government's approach of using property tax as a primary way of taxing wealth. That is, properties with a higher value will pay more in taxes.
With the rental market expected to slow next year, analysts say that landlords will find it hard to pass on the increase in property tax to their tenants. And market watchers are also mixed on the impact of high property taxes on investment sentiments.
In the first 3 quarters of this year, private rents went up by over 11%. The open market rents for a public flat also rose by close to 9%. To reflect the rise in market rents, the government is increasing the annual value of most residential properties. That means homeowners will pay more taxes depending on the type of flat or property. The rebates given will also depend on the type of residence. Some analysts say those buying properties for investment will be most affected, and passing on cost of higher property taxes to tenants will be difficult.
I think it's not going to be easy because of the increased competition for tenants, mainly because of the increased housing supply that is facing the market right now. So as property taxes increase, I think it will, in general, it will reduce the rental income for some landlords.
But Ms. San adds that tenants are unlikely to be affected. That's because most tenants would have signed longer leases of around 2 years and have locked in the rent. She adds that the property tax changes would not have a big impact on the growth of rental rates. Another industry watcher says higher property taxes might dampen investment sentiment.
From the investor perspective, they will expect a higher rate of return or higher investment return. If the rental has not increased to offset this increase in risk, I think the prices have to actually adjust downward to actually meet the expectation. Otherwise, the investor may not find paying the kind of price would be justifiable to invest in the property market.
But real estate agency Huttons Group believes the appeal of investing in properties in Singapore lies in the potential for capital appreciation, and that outweighs the increase in property tax. Some market watchers say that the overall rental market will still be affected by supply and demand, foreign employment, and the state of the economy.
Singapore will raise the annual value thresholds to better assess its social support schemes. Annual value is one of the tools used to determine how much financial help Singaporeans can receive, if at all. Authorities say the revision will ensure those who need financial aid will still receive it. Starting next January, the first tier of the threshold will be raised up to $21,000 from $13,000 previously. For residents living in homes with a higher value, the threshold will be adjusted to $25,000. This is more than the previous level of up to $21,000. For example, a Singaporean with a total income of $34,000 and below and owns up to one property will get up to $850 cash in GST vouchers under the first tier. That's compared to $700 currently. And in the second tier, it will be $450 compared to $350 now. The Health Ministry says that any change in subsidy or help from AV adjustments will be automatically applied to healthcare schemes.